Thank you so much for your question about what tool do we use to complete financial modelling in order to develop portfolios and strategies for clients, because financial modelling is an incredibly important step. You know, you need a certain amount of experience in order to develop a long-term financial strategy for a client, but also there's the objective element of making sure that it is optimized as much as possible. And financial modelling helps us do that, because what it does, it helps us compare two different scenarios to ascertain which one, having consideration to lots of different impacts in terms of cash flow and taxation and so forth, which one is superior, which one will work. And most importantly, we want to make sure that if we take these steps for a particular client, that ultimately it's going to help them achieve their goals. The problem, though, in the financial planning industry is that there are no off-the-shelf financial modelling products that adequately deal with property, and that adequately deal with property in entities as well, and give you enough flexibility to deal with different types of property with different income or expense attributes. Things like land tax, for example, aren't such a big deal necessarily when an investor first purchases a property, but if it's the right property with a strong land value component, that land tax will become a problem one day, maybe 10 or 20 years down the track. Best we know that today in terms of when we're structuring or developing a strategy, rather than find that out in 20 years' time. And as I said, the off-the-shelf products that or that's really available in the financial planning industry don't adequately deal with property well enough. So we built our own financial model that obviously deals with super and shares and bonds and all the other asset classes, but most importantly deals with property adequately, and also deals with entities as well. The one thing that not all financial planners do well is make sure that the tax strategy is congruent with the investment strategy. And to do that, quite often we might be using different entities and different ways of distributing money and distributing to corporate beneficiary and these sorts of things. Again, the model off-the-shelf models, financial models don't really work well enough in that regard. And the second question was, how do I keep up to date with share markets and property markets? It's a great question. The answer is from a variety of sources, I think. Speaking to people that, buyers agents and people that are active on a day-to-day basis, really at the coalface. That's a very important part of it. The other spectrum of it is looking at research reports by the large banks, economists and so forth, that sort of economic research and insights. And then there's a handful of respected commentators or professionals that I've got to know over the period of time, and that I respect, and getting their insights as well. And then my own interactions with clients and other people within the business. So it's not just one thing, but there's many things that kind of form my views. And the thing that I've learned over the last 20 years is don't rely on any one thing in particular too much. So sometimes you can bury your head in economic research and draw some conclusions, but if you're not talking to the people on the ground or the people that are making the decisions, the investment decisions, the chances of making a mistake are too high. So I don't think either of those two answers are necessarily going to help you very much, but it was good to provide that insight. Cheers.